What up, what up, what up? It's your boy, the Options Boss. Sliding up on y'all, getting ready for another crazy week and this crazy market that we got going on. The volatility last week was nuts, as I know you guys saw. You seen the whole short squeeze, the Wall Street bets, all that going on, the battle with the hedge funds. Robinhood collapsed last week. That's another thing I want to touch on a little bit. How Robinhood is limiting everybody from the purchases they want to make and the options and all that. But the main reason why I'm here to drop this video is I had a subscriber ask me about when to know to get out on your call or put option with a loss or with a win, whatever the case may be, before expiration. So I'm going to elaborate on that a little bit because I'm the options boss. That's what I do. I mean, try to help out the new traders, try to give a different perspective to the veteran traders who want to hear a different perspective of maybe they own and, compare the yin and the yang. But before I do all that, guys, do me a big favor. Hit the subscribe button. Hit the like button. Let me know you appreciate the content. If the content is not for you, drop a comment. Let me know that as well. All feedback is good feedback, but definitely hit that subscribe button so you can get videos of this type of content and more from your boy, the Options Boss. That said, I had a subscriber ask me earlier, how do you know when to get out of your call or put option contract before expiration when you're green on it or when you're red on it? So my answer to that question is very simple. Before you hop into a trade, you should have an idea of what percent you want to profit. And you should have an idea of what percent you're willing to lose before the loss becomes too great of a loss for you. Now, that being the case, those particular percentages, no one can specifically tell you. Everyone trades in a way that's beneficial to them. Everyone has a different risk tolerance level, as you guys have probably heard me mention in a few videos. Everybody got different aggression levels. So me, for example, I'm super duper aggressive. So if I make a trade, 8 out of 10, if I'm red on a trade, I'm not necessarily looking to get out, because if I made the trade, then I was willing to risk all of that capital. Every once in a while, I'll hop into a trade. It'll be a losing trade, and I'll see something that makes me think, hey, let's hop out right here and kind of preserve capital and move into a different position, a better position. But most likely, if I got into the trade, I got into it for a reason, and I want to see that through to see if I was accurate or not on it. What happens a lot of times is you'll get in a trade, and the trade will go the opposite direction, but you would have done your due diligence, and when you did your due diligence, what you decided, the trade may go up for whatever reason, it'll go up eventually, but initially it'll pull back on you. So you got to be careful with pulling out. But at the same time, if you're not very aggressive, if you want to be a little more close to vest, that's 100% fine, and I understand that perspective, then they also have a saying, you want to cut your losses quick. So if you get into a position and you see that, yeah, I was wrong, I was off, this is not a winning trade, you want to get out as quick as possible so you don't lose all of that capital. So it's kind of a balance between the two, and I know that could be seen as a cop-out answer, but hopefully you guys can understand what I'm saying, where it's good to be aggressive and wait a bit, but at the same time, if you absolutely see that it's a non-winning position, you definitely want to get out as soon as possible. Now, that could be for different reasons. You could see it's a loser because, the charts start looking really bad. You could hop into a trade and then some breaking news come out if you, trade off of news and things like that, rumors. And if you see that, you might decide it's not a good position at that time, and you can want to hop out. You could be in a trade and see if you have a smaller account and see a different way that would be better to utilize those funds than that particular trade. Like, you may get in a trade and think you got a chance to make a 40% profit, and then you see another trade somewhere else, you say, well, hey, if I was in that trade, I could make an 80% profit. So then maybe you want to pull out and put that money into the trade where you can make the 80%. So those are reasons why you would pull out if you're red before expiration. But the key is, before you hop into a trade, make sure you know what you're willing to lose. And if you hit that number, you get out the trade. If you see yourself approaching that number, you get out the trade. Some people is, cut my losses at 10%. Some people is cut my losses at 20%. Whatever that number is for you, only you can figure out depending on your risk tolerance and your portfolio. Um, but when you get that number, when you have that number in your mind and you're trading, once you see it hit that number, get out. Always stick to your game plan when it comes to a loss. Always stick to your game plan. Never, 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 never risk it because it's just not worth it. Now, on the flip side, when you're talking about getting out of your trade that you're agreeing on before expiration. So first of all, let me say there's this thing called theta that if you guys are not familiar with, hopefully you guys will look into. But basically, theta is the time decay on a contract where every day these contracts lose a little bit of value, essentially based off the, based off the theta. So what happens is, just like I said, you should know how much you're willing to lose when you get into a trade. You should know how much you hope to make off of a trade. So I have this theory. Don't look to get rich off of one trade. It's just a bad idea. What I like to do is I like to make winning trades, and I like to make what I consider big winning trades. So for me, anytime I'm around, anywhere 70, 80%, I'm feeling like I got into a great position. Yes, I do aim for 70, 80%. I know a lot of people say 30% and get out. Not me. But like I said, guys, I trade aggressively. And also, I'm not a financial advisor, so nothing I say is, should be taken as financial advice. It should just be taken as, hey, this guy is telling me what works for him. And, maybe it works for you, maybe it doesn't work for you. But for me, I look for 70 or 80%. So when I hit 70 or 80%, I'm looking to get out. There are some occasions where I'll stick in longer. Like I mentioned to you guys about the losses, looking at the charts. If the charts are ugly, you might want to dip out. Or if it's breaking news come out that's bad, you might want to dip out. Well, it's the same in reverse for when you're winning. If you're winning and the chart look amazing, even if you hit that 80%, maybe you want to stick for a little bit and see if you got 90% in there. See if you got 100% in there. I've made some trades, and I'm sure you guys have seen some guys make trades, and they like post about it on social media and such, where you're having 500, 600, 700% returns. And the way that happens is if you see those charts start looking wonderful to you, don't get scared. Don't get what they call it, paper hands, and you fold up. You don't want to do that. Sometimes you got to hold strong and let your runners run. And that's what a great trader do. So if you have a reason to get in that trade, and that reason turns to fruition, and your trade starts running, and your chart looks great, you might want to stick in it a little bit longer. Now, with all the volatility going into the market today, it's really hard for me to recommend holding anything overnight if you're up 70, 80% on it. But at the same time, I can understand the logic of why some people would do that. But if you're up 70, 80%, and let's say we're at 11 a.m. and you still got 4 or 5 hours left for the trading day, you might want to let that baby run a little bit, see how high it could go. And with that being the case, also you could be in a trade. This happened to me some time back with Spotify, and I'm going to give you guys the exact scenario, and this will tell you how long ago it was. I was in a Spotify trade some time ago, and I was up 15, 20%, no big deal. I was going to carry it overnight. And the 20% turned into 30%, and the 30% turned into 40%, and the 40 turned into 50, so forth, all within a matter of minutes. And I'm on my computer, and I'm trying to pull up news, trying to see what the heck is going on. Why is Spotify taking these big jumps right now? And I couldn't figure out why. I didn't see any news, but I knew something had to be going on because it started jumping so fast after it was just moving slowly earlier that day. And come to find out, Joe Rogan signed a podcast deal with Spotify at that time. I so happened to have contracts before that announcement came. So when it came out, it just shot up. So, you know, instead of taking my 70, 80%, I wound up getting 300, 400% return on that trade right there. And that's what you want to do. So if, you know, news come in that's great for your position, whether it be a call or a put, you know, great news for the call or, you know, bad news for the put, then you might want to stick in your position and get that money out of it that you can get. But the key is, don't be greedy. So when you get all that good news and you running it up even more, if you see any hint of a pullback, take profit. Get out, take profit. You don't have to hold to expiration. That's kind of a thing that some newer traders get confused about. When you're making a trade on an option, you do not have to hold to expiration. Even if you're in the money, you do not have to hold to expiration. You can hold to expiration. There's no crime in holding to expiration. But sometimes, not sometimes, I worded that improperly. Each and every time, if you hit your percentage, get out. And like I said, you can stick in a little bit longer if you see some great news come out or the charts look great. But get out, take your win, move on to the next trade. What I've learned is we have a better chance of winning and getting rich, because obviously we all want to get wealthy. That's our goal. We have a better chance of getting wealthy if you don't try to get wealthy off of one trade. Get in a winning position, win there, move on to the next position, win there, so forth and so forth. Obviously, it's not as easy as I make it sound, because there are losses that's inevitable. But if you get in the majority of winning trades and you don't get greedy, odds are eventually you'll attain wealth. And, you know, that's what I hope for myself. That's what I hope for you guys that's watching this channel. That's what I hope for all my subscribers, commenters, etc. So I hope this video answered the question that my new subscriber asked earlier today. Otherwise, guys, this whole Robinhood thing. Robinhood is being crazy. I know you guys see how they limiting you buying shares and, you know, buying options, and everybody's thinking about leaving Robinhood. Guys, what I'm going to do is in the comments, I'm going to leave you guys my Webull link. If you are looking to leave Robinhood, which I suggest you do, because even before this, Robinhood has been a horrible, horrible, horrible brokerage. And one of these days, I'll tell you guys how they cost me thousands of dollars. But that being the case, what I'm going to do is I'm going to leave my Webull link in the comments down below. You guys click on it, sign up for Webull. You're going to get 2 free stocks for signing up with my link. I'll get 2 free stocks as well. So with that, I want to say thank you for signing up on my link. And also, you're welcome, because you're getting a couple free stocks as well. So I hope you guys enjoy that. Again, hit the subscribe button. Let me know what you think about the video and the content. Definitely hope we all have a green week this week. Be very careful. Watch out for the volatility this week. It is going to be a wild week, guys. This your boy, the Options Boss. I'm a holler when I holler.